All right, guys, it's 1 o'clock. We'll go ahead and get started. And welcome back to another market outlook. Um, look, we've seen some crazy things happen in the past week. Um, we in what is really uncharted territory as far as the state of the global economy, the state of pretty much everything. Not only here in the U.S. but everywhere. So far in the United States, we have seen less of an effect take place as far as countries like Italy and France and Spain. We've heard over the weekend about France closing down its shops and restaurants and cafes and things like that. Italy has been shut down for almost a week. Spain is taking similar precautions. And we're just now starting to see that in the United States with, Apple closed all of its retail stores. Nike closed all of its retail stores. Urban Outfitters. There's a lot going on right now that is making basically the entire world uncertain about the future. So, what we are going to be looking at is now more than ever, it's important to have a good grasp on not only technical analysis, like the patterns and the charts and everything, but also knowing what's going on on a macro scale, on a global, fundamental, basically news-based scale. So my predictions for this week are going to be based around the US dollar because the US dollar is king. And last week it acted as a safe haven currency. So what that means is that the yen was overbought and gold was overbought. So people put their money into the US dollar since it was so cheap following mass is I expect the Fed to cut rates significantly down to zero. We have a policy statement scheduled for Wednesday. However, they could schedule an emergency meeting and they could drop the interest rate before then. If the Fed drops the interest rate to 0%, the dollar will go down. And like I said, news has started and will continue to play a big role in how the markets move. So your technicals and your fundamentals have to be on point. It's not the time to be taking trades that, especially this is not the time to be scalping or anything like that because you don't know what's going to come out. And just to put that point, into effect, if you know who Ray Dalio is, he's a huge billion-dollar hedge fund investor. He's someone that I follow closely. He's a macroeconomic trader. He has the world's largest hedge fund. And what it says is that he was caught wrong-footed during this month's coronavirus-led market turmoil. His flagship fund dropped 20%. What he says is we did not know how to navigate the virus and chose not to because we didn't think we had an edge in trading it. So we stayed in our positions, and in retrospect, we should have cut all risk. What that tells me is that people are hundreds of people working for him, smart people, hard people, the brightest minds in the industry are working for him, and they did not know what to do, so they just kept their positions open. So, what that tells me is that they're thinking about cutting all risk. And if the largest hedge fund in the world is going to cut all of their risk, what that means is that they're going to be moving their money into safe havens. So the Japanese yen, because they're going to pull their money out of risky markets like the stock market, and they're going to put them into low interest account, like low interest bearing currencies or funds that like stocks and treasury bonds, or I'm sorry, like treasury bonds, not stocks. and they're going to hold their money until the riskier assets are looking more lively, until the stock market starts to go up a little bit. So what we're looking at here is on the Dow, we had a little bit of an increase. A little bit of an increase the other day based on Trump declaring a national emergency and things like that. However, I'm not entirely convinced that we have found the bottom yet. I don't think that we've found the bottom of this. Because if you look at the news and you look at everything that's happening and the fact that we could just be at the beginning of the coronavirus, as far as, I mean, you just look around. Like, if any of you have gone to the store recently, how much food was on the shelves? Like, we're literally running out of meat and milk and, cheese and bread. We're running out of food to supply people. So this is this isn't like past viruses. It's not like Ebola or, West Nile virus or anything like that. This is different because of the panic that it's creating. Whether or not it's a more deadly disease, that's possibly up for debate, but it really doesn't matter at this point, because what's happening because of it is that places are shutting down. I mean, let's just look at some headlines on Bloomberg. Businesses, borders closing, Spain deaths double, virus update. Let's just kind of look through and see some headlines. So this week, the analysis, we're obviously going to hop on the charts, but like I said, we've got to look at the news. We've got to get a good idea for what's really going on. And from what I can tell is that after a brief period of a little bit of certainty last week with, people felt good about the national emergency being declared, and this and that kind of caused the stocks to go up a little bit, but that's not going to reverse the market. What's going to reverse the market is finding an actual cure for this and cases beginning to go down. Anything up to that are just going to be little spikes, in what is now officially a bearish market, the quickest bearish market that's ever formed in the history of the stock market. So this world coming to a halt. Europeans are already facing those restrictions, and those are coming our way. Deaths more than doubled within a day, and a 36% increases in cases. Switzerland is up 62% in infections. Goldman Sachs confirmed cases in their employees in London and Sydney. Guess what? Goldman Sachs is one of the largest trading firms in the world. If they shut down, guess what's going to happen to the liquidity in our markets? It's going to go down. That's something else we have to look into as well. If there's no big players trading, you don't want to trade, because with no liquidity in the market, people can come in and drive prices up and down dramatically. And believe me, if there's not liquidity in the market, you are subject to what is called slippage. And that is when there's not enough liquidity to fill your stop loss. So instead of losing $100, you could lose $700, $800, $900, $1,000, because simply they will claim that they could not fill your order because there was no one on the other side of it. If your stop loss is a sell, and there's no one willing to buy from you when you're trying to sell, then it doesn't happen. Then it doesn't get filled. So, cases nearing 160,000 worldwide. Kroger seeks workers, offers paid time off. Nike closes U.S. and European retail stores. Health insurers are dropping copay for testing. Ski resorts are closing in France and Austria. Especially in weeks, Ireland might close its pubs. Whoa, that's a big deal. Europe cases surge. Nugent sees no sign of recession, which, again, it's hard to know who to trust, because, look, you see all this news. It's like deaths rising, cases rising, places closing down, Kroger's looking for workers, all this, health insurance drops copay because we get tested and not have to worry about the money. Nike shuts down. Ireland may close its pubs. Europe's cases surge, and then from the White House we see no sign of recession. Okay, that's because it doesn't behoove them to buy into the pandemic, because that's going to just further halt the economy. And if there's one thing that the White House wants, it's the stock market to go back up. That's their main focus. So with all that being said, just follow the facts. Don't follow the hyperbole. Don't follow the story. Don't listen to, don't listen to any politicians during this, because they want what's best for their country, which is understandable. And it's not to be a conspiracy theorist or anything like that. It's just, how do you listen to someone who has obvious skin in the game? They obviously want the economy to do things like this. But when you look at all the numbers, everything obviously points towards a recession happening. Goldman Sachs, Iran deaths leap. Singapore says UK cases to surge. France limits domestic travel. Cases climb. Austria bans all gatherings. Beijing to quarantine visitors. Over 70 stay home. Malaysia cases jump. U.S. Army case in Europe. Hong Kong air traffic down. Airport crowds. Australia is furthering restrictions. Walmart cutting store hours just so that they can restock shelves. New death in New Jersey. South Korea cases. Everything's jumping up. So, except none of that points to a recession, apparently. So later in the year, obviously the economy activity will pick up as we confront the virus. And yes, and that is right. At some point, things will ramp back up. However, is that 2 weeks from now? Is that 6 months from now? Is that a year and a half from now? We don't know. We don't know yet. So with all that being said, let's just take a look and let's try to make sense of what all is happening. So, amidst the craziness, we saw some strange movements in the market. So, what we had was, last week we were looking at this. We had broken this channel down and closed underneath it on the weekly, which was a good indication that we were going to get a correction and that this would continue down. However, that didn't happen. What we got was a massive surge upward, and that's because the dollar acted as a safe haven currency. So, with this price action, this changed this structure here, because we broke it and we came back into it. So depending on how long this lasts, another scenario in play here, where this could be creating a channel, a much longer term channel here. And price potentially could reach back up to this zone in the 104 level. So we could see something like that happening. What I see most likely, a more likely scenario, is let's drop down to the 1 hour chart. Let's get rid of that. So what's happening right now in this moment is that we're in an uptrend. We're having a correction, an expanding triangle. So what I see happening, if all goes according to plan, if the Federal Reserve does not make an emergency announcement before Wednesday, this correctly slowly coming down, and then I see it shooting up to revisit this top, revisit this trend line, somewhere in the $100 area would be more accurate, somewhere close to this top. So boom, you have this, and then you have and then you have the announcement from the Fed that drops it. And that is supposed to line up, and that lines up with, one, the angle of this trend, and two, it lines up with Wednesday, which is when the announcement comes out, 18th of March. The 18th of March. So that's what I'm going to be looking for. And my setups are going to be based off of this. So if this doesn't happen, if, like, say there's an emergency announcement on Monday and we break down, if we break down, I'll be waiting for the correction. So either way, I see the dollar dropping still because of the cut in the interest rate. But is it going to be Wednesday or is it going to be before Wednesday? We're not going to know until news comes out. And that's why I mentioned first thing in the meeting that the news is going to be a huge catalyst for what happens in the upcoming week. Okay? So dollar, we're expecting to correct to begin the week, come up, and by Wednesday, we're going to see it drop. That's what we're expecting. Gold, another safe haven, has, gold weakened as a safe haven last week, whereas the dollar gained strength last week as a safe haven. So when the dollar takes over as a safe haven, gold, silver, the Swiss franc, and the Japanese yen all lose value. So dollar gaining value, these currencies lost value. This is a commodity, however, it trades like a currency. So what I expect is the dollar to weaken and gold will probably rise. We do have some more room to the upside. However, gold is expensive right now. Buy silver at the bottom. That's the trade. Okay, for several reasons. Look, if you didn't get in on gold, like back in these prices at the beginning of the year, end of last year, then you have an opportunity silver, you have an opportunity to get back in at the bottom. Because gold will never go back down. Well, never say never. However, gold is very unlikely to go down below $10 again ever, because production value, or the production cost, sits at $14 per ounce. So as it trades closer and closer to production value, more and more companies that produce silver are going to go bankrupt and they're going to close. And that is going to lessen the supply of silver. So if there's less silver, there's less supply. And the law of supply and demand tells us that if the demand is steady and the supply goes down, the prices are going to rise. So this is just simple economics. It's 101. And since we have all the information available to us, we know how much gold it costs to produce. It's $14 an ounce. So if we're already in good levels to buy right now. And you could take longer term buys on this, because I mean, you can expect this to get up to $20, $21, because as gold becomes more and more expensive, it becomes less and less attractive. Because for gold, we're nearing, my chart loads, these weekly highs. And as we look at gold on an all-time chart, these are all-time highs right here. So while, yes, it makes sense for a safe haven to gain value right now, Also, you have to look at, investors aren't looking to buy something when it's already near the top of what the range of its price has been. Instead of gold, switch your focus to silver. Because if you look at the all-time chart on silver, it's at all-time lows. Okay. So moving on, let's look at the stock market. We had the worst week in history on the stock market last week. And like I said, don't believe the hype. Don't believe, and it's not just, I don't have any problem with politicians being politicians. That's their job. They have to do that. But let other people buy into that. Let other people believe them. Other people do that. Use your logic. What do you feel? Do you feel that people are excited to invest with this happening, with businesses and borders closing and deaths doubling in several different countries, with Nike shutting down, with Apple shutting down across the world, with Walmart needing to close store hours so that they can restock shelves, with milk running out in grocery stores, toilet paper running out in grocery stores? Do you think that people are excited? Do you think that investors are looking to purchase stocks right now? I don't think so. So use your head. Don't just believe something that someone says because they're wearing a suit and they're standing at a podium and they're in front of a nice building. We still have to we're investors, okay? We're not just the general public who is watching the news just to see what's interesting. We're actually trying to make profit off of what's happening in the world, good or bad. So we have to keep our wits about us and not buy into to all the excitement. Okay? So this is what I'm expecting for stocks is I don't think we've found the bottom yet, unfortunately, because I know a lot of people who are getting hurt from this. A lot of people's retirements are getting absolutely crushed right now. So two of the biggest losses in history have happened over the last 2 weeks. And you can start to see weakness in the stock market starting back in 2008, or I'm sorry, 2018, December of 18. You were starting to see chinks in the armor here. Despite obviously what everyone was saying, everyone was like, oh, new highs here, new highs here. But you can see the bearish price action starting to build actually for over 2 years. Price action, price action, price action. Starting to build. Chinks in the armor. Credit collapsing, credit collapsing. This run in 2017 was built off of tax cuts. Companies were able to buy back their stocks. So without actually providing any extra value, company stocks rose when there was no fundamental reason other than they had enough money to buy back more stocks and increase their share prices. So if you have been following me for a while, I've been calling this for 2 years because what was happening was we were in an uptrend and we were in this uptrend and we were continuing the uptrend, and then all of a sudden companies started buying back their stock. But it's like being in a race and you keep hitting the turbo button, turbo button, turbo button, tax cuts, tax cuts, tax cuts. And what happened is that the engine has exploded because these companies were way overvalued. The price of their stocks didn't match their actual cash reserves, their actual production. So now the coronavirus has provided a catalyst to blow up the engine. And honestly, if we break this bottom, like that could mark a recession. We're already in a bear market. The next thing is that we could continue the bear market and have a recession. So what I expect is a little bit and then fall. And then we'll either catch this bottom again. And once we're back at this bottom, this will be make or break. We're either going to come back up and we'll form this reversal double bottom, or we'll crash down, correct, and just keep going down. And if we have another week like last week, we could be down to levels that we haven't seen since 2016. So last week we saw this level get hit right here. We saw stocks at a price they haven't been in 3 years. So 3 years worth of gains have been completely wiped out. And like I said, we did gain back some on Friday. But my prediction is that we'll end up dropping further. But again, we'll have to wait on the fundamentals and we'll have to see. We'll have to see how the market reacts to the rate cut. Okay, so if we cut rates on the 18th, Euro USD should go up. If we cut before then, if we cut rates before then, Monday, this should shoot up, correct, and then go up. So it's just the opposite of what we're, opposite of the DXY. We're expecting the DXY to go up and then go down. And we're expecting this to go down and then come up. USD CAD, it's the same thing. So I don't normally offer two predictions like this. I like to just give you guys one prediction and one thing to watch and one thing to follow. However, we don't have that luxury in this market. So this is where being able to read price action and, really being on top of how the global economy affects currencies is going to help you trade. If you're not comfortable reading price action, or if you're not comfortable with how the news affects the global economy and how that in turn affects currencies, then this might not be the best week for you to trade. Instead, what I would do is just go back and back test. Look for patterns, use the bar replay and practice your entries, practice marking up charts, go to the academy and go through all the lessons if you haven't done that yet. By no means do you have to trade. And like we just saw in that Ray Dalio Bridgewater thing, he said, I wish we would have taken our risk off of the table. Meaning he wishes that he basically had turned his investments into cash and waited to really make any moves. So that being said, we should be willing to follow suit as well. However, we do have an advantage over a large hedge fund like that because we're working with much smaller positions. So it takes a lot less for us to position ourselves in the market so we can get in and out quicker. We don't need as much liquidity to get in and out. Okay, so that was so USD CAD. We've got a situation here where we were at a zone right here. Get rid of these. We were at a zone right here, but we broke above the zone from right here. We broke above that. We're broken the top of the channel. So this could very easily, just like everything else, USD push up a little bit and then boom, come down. And there is an oil war going on right now. However, I don't think that the oil manufacturers expected this much decrease in demand. So I think they're going to cut back production to increase the prices, because Saudi Aramco is running at, I believe it was a 33% less 33% less profit. And even for the largest oil manufacturer in the world, taking a 33% cut in profit is hard to manage. It's like if any of us took a 33% cut in our income, how hard that would be to manage. So I expect increase to, oil output to decrease, which will give value to the Canadian dollar at the same time that the US dollar decreases. So the news that we're going to be watching on this, oil production and Fed rates. All right, pound dollar. Pound dollar has been falling technically the best so far amidst the coronavirus and everything like that. So really pretty simple what's been going on with it. And basically, we just had an impulse down. And this is what is called a complex correction. So what we had was, we had a 5-wave, we had a impulse down, and a 5-wave correction. 1, 2, 3, 4, 5, followed by a 3-wave. A 3-wave. What is connecting two corrections. We had a 3-wave series doing that, A, B, C, and now we're having an expanding. We had an expanding triangle, A, B, C, and we broke that down. So this is just a complex correction, and what a complex correction is it's two corrections connected by a 3-wave movement, also known as a zigzag. So zigzag right here. So 1, 2, 3, 4, 5, zigzag, A, B, C. One rule is that, this is it's just a correction. It looks nasty. It's like, if you go way up numbering, that's hard to decipher. And it is difficult to decipher while it's happening, but the more you practice, the better you'll get at being able to spot those. So what happened was, we were just following we were following what was happening on the technicals. And then once we broke that, we have a trend now defined on the 1 hour. We had a really nice trend defined on the 15-minute. As you can see, it just kept making 15-minute corrections. So last week, this was a good pair. And I just expect, this is one that we can look at. If the dollar continues to gain, this would be a good one to sell. Check for another 15-minute correction and then sell down. I erased all my lines, so let's set the bottom back into place. On the weekly, so if the Fed cuts rates, or it doesn't cut rates, all the way down to zero, we could see this potentially sell. If they cut rates, I expect it to go up. So what we're looking at now, so we could see something like this where the dollar continues to go up until the 18th, 17th, 18th. This could scale down slowly, create a reversal pattern, and then when Fed cuts rates, boom, we raise out of the bottom here. So I'll be watching pound dollar a lot this week. I think it's a really good setup because we're at weekly bottoms. And this could potentially be a really nice swing trade like what we had here, where we were able to see 3,000 pips or 2,500 pips, about 2,500, 2,500 pips. It's a pretty decently long swing trade, but at the end of the day, that's, it's not only one long swing trade. That's years of prosperity just following this trend. So definitely, big things happening in the world and big things happening in the currency markets too. As a result of that, everything is connected. All right, but for now, just watch for this trend to continue, and until it breaks, until we have a break like this and a correction, just keep following the downtrend. Same thing with AUD USD. I mean, the Australian economy is connected to China, and we've got a really interesting scenario here where if we break through this blue line and close below it, and then we correct on smaller time frames, there's nothing saying that China doesn't recover from this or recovers extremely slowly, and we see the Australian dollar down to 50 cents. I would not have thought it possible, but that's the thing with trading, is that anything can happen at any time for any reason. So no one saw the entire world shutting down. A month ago, no one saw the entire world shutting down. Here's what people thought a month ago. That's what people thought a month ago. Was that? And then the coronavirus hit, and it's, literally retail stores are shutting down, Nike shutting down. Next years, but they're going to be back down to zero. So everything is getting thrown off. Everything. Nothing is immune to this. And then New Zealand dollar is just breaking down this correction. So this is a really similar correction on the monthly that we were seeing on pound dollar, right? But when pound dollar came down to that point, it rose. New Zealand dollar is breaking this down. So, like I said earlier, the technicals aren't the only thing that's going to determine what happens as far as price movement. And a lot of times you can just count on the technicals to be your guiding light. Like we engulfed on the weekly. We had a weekly engulfing candle. So normally when you have an engulfing candle, you get a huge trend after here, like we did here on the weekly, like we did here. We got at least something like we did here. We got a huge trend. Almost every single time we got an engulfing candle on the weekly, we saw a huge trend after it. And what did we get last week? We got an engulfing candle, and then what happened? We broke down this correction. So the technicals don't always work. They don't always line up. That's why it's crucial and it's so important to know about the news as well. And then the yen lost a lot of strength versus the dollar last week. And like I said, people were selling off the yen and they were buying the dollar as a safe haven currency. So what we can expect on this, same thing for Wednesday Fed cut. You know, if there's a cut, we can expect this to go down. You know, maybe it like comes up to here a little bit and then goes down. Or maybe it just consolidates in this area and then goes down. Either way, I think you gain strength, and several markups are showing that. Okay, just got some more news here through Bloomberg. SAS temporarily lays off 90% of the workforce, affecting 10,000 jobs. Guys, it doesn't matter how much the Fed cuts rates if people aren't working and making money. So to think that the stock market is going to just recover doesn't, it just, for me, it doesn't make sense right now. Now, news can change that, but I just don't see it happening because think about all the schools that have shut down. Just like in my town, like and I live in Indiana, and in Indiana, almost every single school is shut down. So what does that mean? Well, if you're a family that has children who can't look after themselves, and you are also both working, has to stay home and take care of the kids. So families are having the conversation this week in their homes saying, which one of us is going to take off this time from our jobs? They're either having that conversation or they're looking for childcare. But how much longer is childcare going to be open for? And once childcare closes down, how many parents are going to be not working? How many parents are going to be unable to pay the bills while they only have one income coming in? And then that goes into how many homes are going to get foreclosed on. What's that going to do to the long-term debt bubble that we have going on, the credit bubble? So the entire economy is coming to a halt, and that's why I believe that things like silver is going to rise, and the yen I believe is going to rise as well. And if you look at the markups on the yen, they all suggest favorite trades for the week. It just looks nice. The technicals are setting up, and then obviously I expect the yen to keep gaining strength because of the uncertainty in the world. This is another good one too because Australian dollar is just continuing to get smoked. They're all setting up with bearish flags. Bearish flag. And it's not so much like that on the Swiss, the euro, and the USD yen. But pound yen, Aussie yen, and New Zealand dollar. And these are the risk pairs. These are the pairs that are most affected by risk on, risk off atmospheres. Bitcoin also got trounced. This was my prediction last week. If you took the sell, you made really good money. If you took the sell, you caught the biggest sell in Bitcoin history, essentially, one of. the biggest sells in Bitcoin history. So if anyone got in on that, good for you guys. I did because I don't really trade Bitcoin that much. I'm just focused on other things. So as far as Bitcoin goes, we've broken down through this channel. I expect it to probably just test the bottom here. Test this most recent bottom somewhere in this zone. It already has. It's kind of moved out of there. I was looking to buy these areas anyway, and it's already there. So I'll probably pick up a little bit of Bitcoin. But that's longer term buy and hold. This isn't like, necessarily short term trading. So bond markets are recovering a little bit. 30-year bonds are rejecting. So, as 30-year bonds get lower, what we don't want is for 30-year bonds. 30-year bonds are at 1.546%, and 10-year bonds are at 0.981%. If the 30-year bonds cross under the 10-year bonds, then the yield curve is inverted, and that's a key sign of a recession. That means that you get paid more money for holding a 10-year bond than you do for holding a 30-year bond. So you get paid more for a shorter investment. And that is in the economy. So I've been looking at bond yields lately too, amidst all of this, amidst the coronavirus and everything, to just keep an eye on the likelihood of a recession. All right, so just a quick recap. US dollar, we're going to be looking at this chart, DXY. All of my trades will come off of what happens with the dollar. So correct, come up by Wednesday, get an announcement, and come down. All right. Well, guys, that does it for the market outlook, and I'll keep the group updated. I'll keep everything posted. And like I said, feel free to use caution this week as things shake out, as we get a big Fed announcement. Like, there's a lot going on. Same time, if you see a setup that you like, use proper risk, and don't be scared. If you put on the trade, and don't worry about it. As long as you only risk what you're willing to lose, there's no way that the market can affect you. There's no way the market can affect your psychology. If you know your strategy, you know your strike rate, you know your average risk to reward, then if you have a plan that can't lose, then there's no need to get emotional unless you over risk. So keep your risk in line, and you'll be fine. All right, thanks, guys.